We're 3 hours into trading. It is Wednesday, September 29th. Hello, traders. We had a nice big sell-off in the market yesterday. Not unexpected. We were expecting either a retest of this support level or perhaps even a breach of it. Let's put up the major moving averages, see where they come into play. The 100-day moving average is within striking distance. We tested it yesterday. The 50-day moving average has failed up here. We also have the downward sloping trend line that's providing resistance right at that same point. So why did I suspect that we were going to be testing this low? This selling pressure in here told me that we were likely to test support a second time. This is the heaviest selling pressure that we've seen in, gosh, almost the last year. We came all the way down to the 100-day moving average, which we haven't tested in a long time. Yes, of course, we were going to bounce because that's what we've seen on every other little dip. But that also left these dip buyers very vulnerable. And then yesterday, wham, 100-point S&P sell-off. When you get a long red candle like this, and now we've tested the support level a second time. Did we test that the second time? No. Sell off, go. Test that a second time? No. Sell off, go. This one? No. Sell off, go. This one we actually did, but it was very brief. This is a tell, and it tells us that there is some natural profit taking happening. So we need to be careful because this could be one of two things. It could be a bounce and a higher low double bottom, which continues to find support, and then eventually we get a long green candle up through that downward sloping trend line. That's certainly a scenario that could play out. We could also see another leg lower. Here's what I'm watching in the price action today. If the market closes near the low from yesterday, near this 100-day moving average, I would view that as bearish. Why? Because all of these losses from yesterday have been preserved. And that tells you that no matter how aggressive buyers were, they tried to come in, they just could not spark any kind of momentum or any rally. It also tells me that asset managers who are sitting back saying, yeah, I'd like to allocate some money to the market, but given this price action right here, why would I want to be in there right now? I feel that we're going to have another leg lower. So as an asset manager, I am going to wait for this support to be confirmed. Could come in the form of spending time here and then a candle through that downward sloping trend line. Or it could be, hey, I'm glad I waited because here we go. There's another leg lower and I can buy my stocks even cheaper. That is what's happening right now. So it's important for you to understand the price action, what it's telling you, and the mentality of the players. We'll go into the 5-minute chart. We'll take a look at what's happening. Here you can see that the market tried to rally. It tried to get through this resistance level, tails above body, nothing going there. We had a bearish 1OP cross in here. I did view this prematurely as a compression that would lead to a breakout to the upside, so I lost money on it. Call a spade a spade. I lost 7 S&P points on that. I have not traded since. Now you can see, get this sell-off. We have an upward sloping trend line here, breach to the downside. This could have been resolved in two ways. This could have been a nice pullback, and then we rally through the high of the day, or we have a bearish flag formation. That's what this is. There's your upward sloping trend line. There's your long red candle. Now we've got follow through, and you can see how we're starting to drift lower. In my pre-open market comments, I had mentioned to members that with the type of selling that we saw yesterday, that gap higher is going to be challenged and the bid will be tested. They want to see how strong the bid is. And now we know that we're likely to come down and test that 100-day moving average again. I did not short this move because we had a bullish 1OP cross right in here. So I did not want to trade against this indicator, especially when we had a whole lot of nothing going on. We're still within the first hour's trading range. We're inside of yesterday's range. So we have an inside day because we're inside of yesterday's range. And we have another inside day because we're still in the first hour range. Now we're testing the low of the day. I feel that given this selling pressure here, we've got a little bit of orderly selling taking place in here, that it's likely that we're going to test the lows from yesterday and we're going to test the 100-day moving average. So this is what you need to bear in mind. If we close right on that 100-day moving average today, I view that as bearish. Bulls could not get anything going. They could not rally the market today, even after a big drop like this. Typically, after big drops, we've seen instant buying so far this year. Big drop, instant buying, big drop, instant buying. Not happening. Second retest of support. So we need to be super careful here. If by chance we're able to test that 100-day moving average and rally back to the high of the day, which is approximately SPY 437, that's halfway through this long red candle. That would be a victory for the bulls, and I would expect to see a gap up tomorrow with nice positive price action follow through. So we need to see how this day plays out. It's really a critical juncture. We don't have a lot of news coming out. Next week is the big news week. So as for today, we're going to test that low. Let's see if that 100-day moving average holds. Let's see if we can rally off of it. Very lackluster price action, which, by the way, what I'm telling you right now is I don't know where the market's going to go. I don't know. And I had contemplated not doing a video because I don't know. But there's information in not knowing market direction. Well, what's the information? What should we be gleaning out of this? It means you don't trade. It means you don't have an opinion. You don't know which way the market's going to go. There should be a nice move in either direction. We don't know. No, I'm not going to sell straddles and do neutral strategies. No, I'm not going to buy straddles and do neutral strategies. I'm going to wait for this to be resolved. Then I will pick a side and I will trade accordingly. But until then, it means I need to keep my size absolutely tiny. And my best trade is just sitting on the sidelines and waiting for something to show up. So I'm going to show you a stock that I like. I'm going to go into my short squeeze, and AUPH is one that we've highlighted before. I love the fact that the stock was nice and strong, able to get above the prior day's high, had a little dip and rebounded instantly. When did this rebound take place? Took place when the market was going down, down, down. That tells me that this stock has some nice strength. It's got excellent volume. Go into the D1 chart while we're waiting for the market to figure out where it's going to go. Yes, some upside resistance here. Click GTC. Click on that candle right there. Now I know if the stock gets through that high, it's got a chance to continue to run. Let's see if we can find a couple of shorts as well. By the way, Facebook was a short that I had highlighted yesterday. Stock down again today, so it's been a decent short. And the other short I showed you was ADBE. But to be fair, I said this one's risky. This one has already made a huge move. So I don't particularly like shorting a stock that's already down so much because you risk having a big short covering bounce. And that would take us to the 100-day moving average. What I'd rather see is a creep higher to that 100-day with a strong market, and the market continues to go higher, but the stock is repelled at that 100-day moving average. Then I would know I've got a decent shorting opportunity right there. We can take a look and see what else we've got popping up. I'm going to go into maybe bear run. Gosh, there are a lot of stocks in here to knock through. And maybe I'll go into ice cold and see if there's anything there. Go into Google. Google is actually breaking technical support right there. We had a bearish flag formation, selling off. I'd mentioned to you yesterday that tech stocks are weak today. TLT has been down. Take a look at TLT, that breach of the 100-day and 200-day moving average, that breach of the major horizontal support at that level as well. That's negative. That means higher interest rates. Everyone's worried about Fed tapering. Higher interest rates typically not good for tech stocks. SQ, that's a nice little breach right there as well, below the 200-day moving average. On the short side, let's see if we've got some relative weakness here. And you can see how the stock has continued to drift lower. So yes, I like SQ on the short side. Looks pretty good. Roku. And again, all of these folks are day trades, and you should err on the side of not doing anything. That is your best trade. Because what happens if the market tests the 100-day moving average and it shoots higher on a couple of long green bars? You're going to lose money on a trade like this. But if the 100-day moving average is breached and we continue to drift lower, those are stocks that you want to watch. Market finishes on its low of the day at that 100-day moving average. I've told you I think that bodes poorly for overnight. Probably going to see an overnight sell-off. Yes, these stocks would be good shorts to perhaps hold overnight. So you get the move to SPY 437 and a nice close above this level. Then you may consider buying AUPH for an overnight. That's how I would play it. Stay fluid. Don't make any big trades right now. Let the dust settle. Let's figure out which way the market's going to go. Then we can act on that. So Roku, yes, it does look like a nice little short. Coin, COIN, choppy all over the place. Forget it. No interest. NET, gradual drift lower. Take a look at the D1, and you can see how, yes, it's got that 100-day moving average within striking distance, upward sloping trend line, breach to the downside, heavy volume, relative weakness. Yes, NET has all the ingredients to continue to move lower. If I had to pick one, SQ. That would be my short of the day, AUPH, my long of the day. Keep it light, try not to trade. Don't have much in the way of overnight exposure. We close on the low today, near that 100-day moving average, bearish for overnight. We finish above 437 SPY, bullish for tomorrow. Got to keep it to day trading right now and very, very, very short-term swing trades. We need to figure out which way the market's going to go. Then we can decide on longer-term swing trades. Thanks so much for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.